Okay, now I'm joined with Richard Blakesley, who's the founder and CEO of Capital Pilot. Hi, Richard.
Hiya.
Yeah. Okay, would you like to just give us a bit of a background to Capital Pilot, what it is and what you're trying to achieve through the platform?
Sure. So Capital Pilot, we're the investability rating agency. And what that really means is that we are taking the same approach to early stage fundraising for startups and scale ups as the credit scoring agencies do for consumer credit scoring. So Experian, Equifax, these sorts of guys give you a score, tell you how you can improve your score, and that score is then used to give you access to financial services. So what we're doing for startups is giving companies a rating based on their investability, the strength of their investor proposition, and that score is then used to give those companies access to sources of funding, identifying who the right sources of funding are and so forth. But along the way, as a company comes to us and gets that rating, they're also getting a lot of assessment, analysis and suggestions about how they can improve their score. So what can they do to get themselves in the best possible shape before they go to market and start meeting investors? And it's obviously critical right now because fundraising is never easy, right? It's never a fun experience, and it's never going to happen quickly or easily. But particularly right now, it's even more difficult. So you've got to be even better prepared. And what we've come up with is now a two-pronged rating, which says in normal market circumstances, your rating would be this. In current market circumstances, your rating might be a little higher or a little lower than that based on the viability and sustainability of your business during this current time. So we rate businesses, we then signpost them to investors, and we also do some introductions to investors where we've got decent relationships, which obviously we don't always have.
Yeah, okay. So there's kind of two sides to it, isn't there? So there's you're given the business a rating, so you tell them sort of how strong their proposition is, and it might be perfect, it might have like the highest score possible and ready to go, but chances are it probably needs some improvement or some refinement. So you would give them that feedback and tell them how to improve that. But then once they're ready to be introduced, you pass on the rating score to the investors, is that right? So you might say to them, look, here are some companies that are a certain number or above that we think you might be interested in. Is that how it works?
It's not quite like that, because we think that the rating should be private to the company that's requested it. So if you've obviously, if you've got a really bad score, then you don't necessarily want that score published, right? So the score is private to you as a company, and you then can choose to disclose that. And we hope obviously that lots of people do. Yeah. And we hope then that our rating system, like Equifax, like Experian, becomes this sort of market standard. So it is natural for a company to say, we have been rated by Capital Pilot and we are a gold tier company by Capital Pilot, and here's the badge on our presentation or on our website.
Okay, cool. And I know it has changed a bit over the last couple of years since we first met. Yep. The process, am I right, people can just sign up for Capital Pilot for free just to get onto the platform, but if they actually want some assessment and some ratings done, they have to pay for that service. Is that the way you're doing it now? Is that right?
That is correct. Yes. So the rating, I mean, there's quite significant work that goes into this rating. It's not and it's not fully automated, because actually what we're doing here is we're rating things that are matters of subjective judgment. Mm-hmm. So the cool thing about our platform is that we're turning into numbers human judgment. Yeah. Which is a kind of beyond AI kind of concept, which is really quite cool, and we're expanding and evolving all the time. But yes, there's still some human involvement in it. So yes, the rating costs money. I can tell you right now that we will do a special deal for Newcastle Startup Week members. Okay. So normally we charge 150 quid for an assessment. Okay. We will reduce that to 100 quid for Newcastle Startup Week members, and we will figure out exactly how to deploy that to you in the next few days, so that everybody's got access to that.
Right, amazing. Okay, well, we'll post a link underneath the video and with some details on how to do that. That's amazing. Thank you for doing that. Because go back, I mean, it is it is difficult. I mean, I've never raised investment, but I know lots of people who have, and I've read a lot about it, and I've had people tell me it took them like 6 months, 12 months longer to raise investment. A lot of up and down, traveling the length and breadth of the country, traveling overseas, and then eventually they find the right investor. But a lot of people don't even do that. They just look to their local kind of friendly investor or investment fund. But they're potentially doing themselves a disservice by not casting the net a bit wider. And I think that's the thing that really appealed to me initially about what you were offering, was you were trying to level the playing field and make it easier. It doesn't matter where you're based. You don't have to be in London or another major city to access good investors. And that's what you've got. You've got your network of investors already, and you're adding new investors all the time. And you're now onboarding more and more businesses as well from all over the country. So why do you think that's still important, or is it still a challenge? It is.
It is still important, and Paul, you and I have been talking about this for years, and the situation, frankly, hasn't gotten any better.
Yeah.
And that regional, or the inequality of the marketplace, whether it's from regional, gender, race, business model perspective, those inequalities still exist, and it's crazy. So some privileged person sitting in a nice, or not right now, sitting in a nice converted warehouse in Spitalfields in London, versus somebody who's in their back bedroom in Carlisle. I mean, the differences are vast in terms of your access to network. So our rating system is designed to kind of be your network. So if anybody can get a rating, and the rating is neutral and it's unbiased, so it doesn't favor the Spitalfields warehouse dweller. So the Carlisle back bedroom sitter can get the rating, and that is the signal to the entire investment market that they are a company of quality, and that's the whole point behind it. So it's a matter of, it's always been from our perspective a matter of extreme importance that we start to level that playing field for everybody involved. So yes, it's about access to all the investors. Investors are lazy people. They're not going to go beyond their existing geography if they don't have to. They're not going to travel if they don't have to. But what that means is, on the other side of it, people who are trying to raise money but don't know people they don't know really struggle with access. And hopefully we're doing things to improve that. Yeah.
Well, networks have always been important, obviously, physical networks as well as digital networks. But I think in a weird way, the whole coronavirus lockdown might actually be an advantage now, because I know in the past when I've talked about trying to get more investment outside of London into the regions, when I worked for Tech North and before then as well, one of the kind of quick sort of things that people would say is, well, investors like seats on boards, so they're not going to invest in a company if they can't just get there quickly. But now, presumably, board meetings are taking place over Zoom or Teams or whatever. So that, in a way, that argument's gone. Like, I mean, you still get a lot of energy from people, and going around the room's not the same. On a Zoom meeting, you can't necessarily read the reactions of people on a screen, but still, it's potentially going to make it much more likely, or people are more open to the idea of doing remote investments.
Yes, I think so. And again, what's happening, the investment marketplace is badly broken. We've talked about this before, and my colleague Shario was at last Newcastle Startup Week. I was there 2 years ago. It's always the theme. It's such a broken marketplace. And actually, if you want to look at one place in the entire UK industry where you've got a real sense of establishment and cliqueiness, it's the early stage investment marketplace, and it's mad. This sort of, the innovation world is as cliquey as you could possibly imagine, and it's crazy. So breaking through that is really difficult. And actually now I'm somewhat hopeful that this massive dislocation that we're all suffering from might be an opportunity for us to change the way in which some of these things are done. so that we can put in place better practices for the future. Now, as a business, when the virus hit and lockdown started, frankly, we sort of sat and scratched our heads and thought, we're at the eye of the storm. We're a business, we're a startup that helps startups to raise money in a marketplace where all investors are sitting on their hands or only supporting their existing portfolio companies. We're doomed. So there's a real sort of dad's army sense going on around Capital Pilot for a while. And the thing that we came up with, which we are pushing now to get into market as quickly as we possibly can, on the back of our rating system, is the Rescue Equity Fund. Now, the Rescue Equity Fund is important for two reasons. And it's important now because it's a means for businesses to get access to equity funding very, very quickly once the fund is raised, and it's not raised yet, just to be clear. But also, as I just mentioned, it's potentially the way to change the way in which early stage investing happens in the future. So the idea is companies that achieve a certain rating threshold, having been through our process, automatically get £50,000 worth of investment, which is meant to be survival money. It's not meant to be blow it on massive exponential growth money. It's just get through the next few months money. And in the next few months, once you've spent that, you can come back and get another chunk of 50 grand. But if you think about where that money is coming from, it's institutional money, and we've got some really good conversations going on with some major financial institutions and with family offices and high net worths to get the money into that fund now. So we've got people who want to get, as investors, a spread across many, many, many startups. So they've got exposure to lots and lots of businesses that have all been through a standardized rating system, which is a very different way about going about early stage investment than your average angel or VC. So that might be the means to create a very different future for early stage investment, which includes this passive institutional money alongside the angels.
Amazing. Okay, so you've just launched that quite recently, haven't you? Why again? Well, it sounds great the way you've explained it there, but also what I know about it. But why do you think that's needed as well? Because even without there's still a gap, isn't there? So the government support that's available, there's a lot of people who fall through the cracks and aren't eligible for the government support. I mean, I know myself, I wasn't eligible for most of it until the bounce back loans came in, and then I've been successful in getting one of those. But you were telling me before you've just done some analysis into some of the companies that are out there, that potentially high growth businesses, and there's a lot of them aren't eligible for any of the support. So do you want to talk a little bit about that?
Sure. So we did some numbers just recently, and it looks at the future funds just announced. It looks at C-bills, it looks at bounce back loans, innovation loans, and grants, all that package that Rishi Sunak announced or has announced in the last few weeks. And it's worth pointing out that lots of people have been panning the government and saying, these schemes don't work, they're exclusive and all the rest of it. The government, I think, has done an absolutely amazing job to deploy all that capital from a standing start as quickly as they have done. And it's almost inevitable that it wouldn't be perfect, and it still isn't perfect. And it's imperfect based on our analysis to the extent that 60% of the entire UK universe of growth businesses that are reliant on external funding will not get anything from any of the schemes that have been announced. So a lot of companies aren't eligible for them because they don't meet the criteria. So in the case of Future Fund, for example, you've got to have raised £250,000 or more in the last 5 years. Many, many companies haven't done that. 2/3 of companies haven't achieved that. Excuse me, just get some water.
Well, I would say that before, definitely in the regions, there's very few companies that have raised that much money. Most of the ones that I know, it's like 50 grand, 100 grand, maybe 200 grand. There are people who've raised more, but if you've raised 100 grand, you're seen as a successful raise. So yeah, it precludes a lot of those people.
So basically, if you take into account both eligibility for those announced schemes and the amount of money that's been announced as available for those schemes, and do the numbers, 60% of the 30,000 odd companies that fall into that growth category don't get any money.
Right.
So the Rescue Equity Fund is really, really important to fill that gap. And it's also, I think, important for the startup community as a private sector rather than public sector to do something about this, right? So we shouldn't rely on government to fix all of these problems. No. We should be trying to come up with our own solutions. And we've been engaging to the extent we possibly can do with the public funding organizations, but focusing on the private side, either because that's the more likely avenue to get our proposition up and running as soon as we possibly can do, but also because if we can start this off in the private sector, maybe we can create a structure which the public sector, the government, can then row in behind and contribute to once we've got it up and running and have proven that it works.
Yeah, that's good. I know it's I agree with you. I have been quite impressed at how responsive the government's been, how fast they have moved, because they do seem to be listening and responding to the feedback that they're getting from the local authorities, the local enterprise partnerships, the membership organisations as well. So yeah, I think they are listening and they are trying to respond. So it's good. Are you feeding things in through people like the councils or the LEPs or even the British Business Bank? Because
we talk to whoever we can get a hearing with, and we've got some connections in some of the places where these schemes are being deployed. What's happening is obviously, and there's no sort of political slant on any of my comments here, by the way, but what's happening is you've got people who've got fixed jobs and they're being told to deliver on a certain plan. And so they don't actually have time to listen to alternative suggestions. They just have to deliver. And that may change over time. And there's evidence, I think, now that government is sort of saying, well, we've done enough for the early stage tech sector now with all of these various different schemes. That's appropriate what we've done, but there's no need to continue to do significantly more. And maybe at that point, perversely, there's an opportunity to get more airtime with them to tell them why they perhaps should do some more. But I think, a lot of us have been very focused on the very near term, but this situation and the impact on the economy isn't going away anytime soon. So we are in this kind of life support situation as far as the economy is concerned for the foreseeable future. And things don't get better in July or October. Things are going to be different and hopefully somewhat improved. But this is a very long-term problem. And so things are definitely going to evolve, and the means through which government supports businesses and individuals is obviously going to evolve as well. We are just focused on doing what we can do, which is not whinging too much to government about how we didn't qualify for any of these things that they've announced, but getting on and creating stuff that is a model that can use major forces in the private sector and our own ideas to see if we can come up with good stuff that helps thousands of businesses, because that's what we're trying to achieve.
Yeah, good. I think you're right. I mean, at a much more smaller, more local level, I did a little survey with some businesses in the northeast to put forward an idea of a micro business fund, and I just thought, well, could you give people just a grant for 6 months? Could you give everyone 12 grand just to keep them going for 6 months, just on the assumption that £2 a month is probably more than enough for some and not enough for others, but £2 a month would keep a lot of businesses going. So I put it out there, started put it on LinkedIn, and got good feedback from most people. Created a Typeform survey, put it out, and I had 117 businesses filled out the survey, all from the northeast, across the northeast. 113 of them said that they were worried about surviving for the next 6 months. Again, I asked them how much based on how much money they had in their account, how long they thought they could survive. And most people said 2 months, 3 months, 1 month, like it wasn't long at all. Then I asked them what the minimum amount of money they needed to survive. Most people said 2 grand, 3 grand, in fact, not a huge amount of money. Some people 50 grand, 250 grand, right? Then I asked what they'd applied for, what government support they'd applied for. Most hadn't applied for any. But the ones that had, the next question was which ones have you been successful with, and most were not successful with any. So it's probably very similar to what you've got there. And I have fed that information into the councils and the LEP and the British Business Bank. And they have said, look, that is really useful, that's valuable insight. You've got some data there that we don't have because we don't know how to access those tiny businesses. But similar to what you were saying, definitely felt like they were just, for a period, understandably, just regurgitating the government message.
Yeah,
it's just the same stuff coming out right applied, but almost like that they were doing enough. But the smaller businesses, the startups, don't necessarily have their voice, especially if they're not a member of one of these membership organisations or don't have direct access to the banks or the councils or the LEPs. So.
And I've been ranting about this for a while, Paul, and I'll have a mini rant now because you've opened the door for a mini rant. Isn't it extraordinary? Who are these people that are representing startups in these meetings? They are people who were last a startup in 1998 when I checked. So Brent Hoberman, lovely guy, but lastminute.com was a 1998 flotation on the stock market, right? And I'm not quite sure where the real true startup voice is, because that's not it. And he's done a fantastic job of raising awareness. And I think to some degree there was a need for a poster child. But at the same time, where's the voice of these people that you've been talking about who filled in your survey? Where's the voice from startups from outside of the Southeast bubble? Yeah. And it's worrying to me that startups don't have their own means of communicating to express their own needs and requirements. And the associations are actually largely people by investors. Because Brent's an investor, really, now. He does lots and lots of really great things with startups. Yeah. He's basically an investor. Yeah. And so you've got investor organisations telling government what they should be doing for startups. Well, potential opportunity for some conflicts and mixed messages there.
Yeah, well, that's what I was wondering is, I mean, I'm not saying him on his own, but I was thinking that minimum threshold of 250 grand, like, where's that come from? I mean, to them, to him and others, that might seem like a reasonable minimum threshold, or it could potentially be seen as a way to deliberately push some people out the way and just focus on the ones that they want to focus on in their circle in London, or it's that.
Well, to give him his due, and I know this for a fact, he was instrumental in reducing that number to 250,000 from a higher number before. Wow. So I know that for a fact. So we must give credit where credit's due. And as I said, he's a lovely guy, does lots of great stuff. So I have no issue with him whatsoever at all. But and I think there's been, and it's the reason why the Future Fund clarifications have taken such a long time to come through, is because there's been intense debate from the time at which the original term sheet was put out. Yeah. So and he and a group of others have been involved in that debate, and I think they've achieved some positive change as a result of their involvement. So yeah, credit where credit's due.
No, I think that's good. I think though it just shows it's not just giving voices to the smaller companies that aren't represented, but it's the regions as well. Because if you live and you work in London or other major cities and that's all you know, you do have, it is that unconscious bias, isn't it? So you think, oh well, that's all I'm seeing, and that seems reasonable. And I'm not saying him, but maybe the government, or the politician, or whoever came up with that scheme, to them or the banks even, that might seem like a reasonable thing. But having the voices in the regions or the smaller companies and the startups themselves, like you say, making sure that their voice is heard, that they're represented is really important. I think that is, there's a role for maybe you to do there, but also I definitely felt like by running Newcastle Startup Week and the access I've got in not just the northeast but the north and other parts of the country, I felt like I had a role and a responsibility to try and not only get messages down to the people, but also feed it back up the food chain as well.
No, I think absolutely right. And, I'm in danger of sounding somewhat hypocritical when I talk about the people who have their converted warehouse offices in Spitalfields, because my office was in central London as well, right? So I'm part of that southeast bubble, frankly, doing whatever we can as an organization, always to see the bigger picture. And the southeast bubble doesn't need help. The southeast bubble kind of works. And so our mission must be, and it's southeast bubble, that's just looking at the geography. And as I talked about, there's lots of other inequalities across the system, and lots of other playing fields that need leveling out, whether, as I said, that's gender, race, business model type, and so on, so many other different elements. But region is so important because region is something that coalesces people and groups and communities. And so our ability to operate neutrally across all regions is a major kind of part of our mission.
Yeah, well, these are all the types of the conversations that we had, I think 2 years ago. I think we met in January 2018, I think.
Was it even 18 or 17 even?
I think it was it.
It was a while ago, because I think we set up our original business in 2016, and I think it was 2017.
Right, 17. I think it was a cold, wintry, snowy day in Newcastle. You came up and we had a good conversation, pink lane coffee, and then
correct.
Just immediately, I loved what you were trying to do and the way you were talking about that kind of being neutral, impartial, leveling the playing field, supporting the regions. Just loved everything about what you were trying to do. And and you've spoken at Capital, you've spoken at Startup Week last year and the year before.
And the year before, yeah.
And that's why we're talking now, isn't it?
Well, absolutely right. And we've been through interesting times, obviously, through that journey. And actually, we went through our own major restructuring last year. And it's like, this is the life of the entrepreneur, right? So about a year ago, my co-founder resigned, and we were basically stuck with a completely uninvestable capital structure. And we had to do some pretty extensive restructuring, which took months and months and months to get ourselves back on our feet. We get ourselves back on our feet, and then a pandemic hits. So these are the sorts of things that you have to sort of respond and react to. And it's I feel a little bit like the Black Knight from Monty Python sometimes. Lost all of the limbs and keep on fighting and sort of come over here and I'll bite your ankles. But this is the life of startups. There's always another hurdle. There's always another wall that you've got to walk through to get to your goals. And some of the stuff that you're going to confront is completely outside of your control. And in fact, it's kind of nicer when it is outside of your control, because, I look back at my co-founder resigning and I think there's probably stuff I could have done to have avoided that. There's nothing I could have done to avoid the pandemic. And so there's a bit more of a positive mindset, if you like, about, fine, okay, well, we're all in this together. What can we do to fix it and move on? And the sort of the mind is pretty clear, looking at solutions for our business and for the market that we're looking to operate in.
No, definitely. I think it's rise to the challenge now, isn't it? Because I think you touched on it before, and me as well. There's definitely a period of time where it's just like, what the hell? You're just trying to keep things going, and then you come through that, and now I'm excited. I am genuinely excited now. Obviously, it's a horrible thing for lots of people, and I don't want to be stuck in isolation. I want to be out meeting people. There's lots. I miss all the energy that I get from other people meeting them in person. But at the same time, as an entrepreneur or entrepreneurial person, this is what I like doing. Like coming up with solutions, being creative, rising to the challenge, just getting over problems, and that's why you do what you're doing as well. And
yeah,
that's the excitement, isn't it?
well, I think that's right. And beyond the horror of what we're all going through in terms of the virus itself and its effects on lives, but also the massive trickle-down impact of people's jobs and economy and mental health and all those things, there is this sense that in times of crisis like this, the playing field does level out a little bit.
Mm-hmm.
And there is a bit of a sense that that new things, exciting new things will come out of this and are coming out of this already. Mm-hmm. And I think if I think about what we can do here, which is potentially to change the way in which early stage fundraising happens, mm-hmm. because we can get started now where there's a gap in the market. Mm-hmm. And that's a great thing that we can do now to support companies that are struggling to raise funds, but also a fantastic thing that we can do for the long-term future, which is going to impact many, many businesses going forward. That's kind of the challenge to all of us as entrepreneurs, is to find those gaps in the market and find those opportunities to do things now, or to create ideas now, which have a long-term opportunity to do things better than we have been doing in the past. Yeah. Far too easy for us to go back to our old ways, which, should that be possible, maybe it won't. Mm-hmm. Far too easy for us to just relapse into old thinking. Yeah. Fantastic opportunity to think new, think better, think sustainably, think diversity, and build a much better future for all of us.
Yeah, amazing. That's a really rousing speech to end it with. I think you should be. We should record that. Well, it is recorded, but we should play that again. That was excellent.
Bit of background music maybe as well.
Yeah, a bit of emotional music. Yeah. So what's next then? Obviously, you've got your rescue equity fund that you're close to potentially getting signed off with a major financial institution, and then but you want people obviously to register onto Capital Pilot now and to go through the rating process now. So I said at the beginning, people can just sign up, they can just register, start the ball rolling for free, but obviously if they you want them to go through the rating, and we're going to have an offer where it's £100 to do that. So that's ready now, isn't it? People can just get on the website now.
Yes, so all of our attention right now is on getting the Rescue Equity Fund up and running and making investments as soon as we possibly can. And it's a super difficult thing to do, to raise a first-time fund in the middle of a pandemic. I mean, we're lunatics even trying it, but we're making good progress. And so for startups perspective, you can register now so you get in the queue. So capitalpilot.com, pre-register for the Rescue Equity Fund. On the website, there's a whole load of free resource that talks about how to go about fundraising. And we're putting that out on a weekly basis through newsletters to startups. So if you register as a startup, you'll get the newsletters anyway, and you'll be informed about news as we go forward. You can get an assessment straight away now. You might just want one because you want to see how you're doing as a business and how you can improve. And you get your 24-page report, which has got some super valuable content in it about how you can improve your investability. Mm-hmm. And as soon as we feel comfortable that we're not going to be taking people's money off them under false pretenses, we'll be making the next announcement, which says those who have pre-registered and anybody else should now get in the queue for an assessment. And then the assessment and the rating that comes from the assessment is the trigger for the fund. But obviously we don't want to be taking people's money under false pretenses when we don't have the fund in place yet. Yeah. But there's lots of benefit to getting the rating and the assessment report anyway. Yeah. We just don't want to promise that we've got the fund until we actually have.
Yeah, sure. And can people they can get assessed as many times as they want. So, you know, you get a rating, and then you give them some suggestions to go away, improve it, and come back. There's no limit to how many times we do that, and it's
no limit.
Yeah.
It's and a lot of companies do two assessments.
Yeah.
I can't think of a business where we haven't found an opportunity for some significant improvement.
Yeah.
And remember that what we're trying to do here is not to make judgments about whether an individual company or business sector or business type is likely to be more or less interesting to investors. We're basically saying, is your company as good as it possibly can be?
Yeah.
So rather than waste your first investor meeting figuring out what's wrong with your proposition, let us figure out what's wrong with your proposition, give you loads of neutral feedback in a positive and constructive manner that enables you to then say, right, I now know how the market is likely to look at me. I can improve, get myself re-rated so that I know I've got to that point of excellence. And then I can go to market with much more confidence that I'm as good as I can be.
Yeah, brilliant. Okay. And then on the other side of it, if you're an investor and you're interested, you can obviously register on the platform as well. You've got the two sides to it, so they can get on there now. Is that right? Yeah.
Correct. We've already got people registered. We've got 100 companies already pre-registered for the Rescue Equity Fund within just a few days of us making that announcement. We've got a bunch of investors as well. We're really trying to tie down that big cornerstone investor who's going to help us to lead the fundraising charge. But obviously we're massively interested in hearing from anybody who would be potential investors in the fund. And the proposition for them is you get early stage investment in the most sensible way. You get lots and lots of diversification. You spread your risk across lots and lots of companies that have been through the exact same standardized process to select them. And that's got to be a very good way of investing in a high risk asset class like early stage tech.
Okay. Amazing. Okay. And if anyone watching this is an investor or they're interested in getting involved in the fund, do you want them to contact you directly? Or
yes, I'd like them to contact me really very quickly indeed. Yeah, richard@capitalpilot.com. And myself, I'm more than happy to talk to anybody who's interested in investing. We've got some various interesting conversations going on regionally as well. So various entities that might be interested in doing regional versions of Rescue Equity Fund.
Yeah.
That's not our preferred route necessarily. We'd rather have just one big national fund, but there are various ways in which we can cut our proposition or allow other people to use our rating system as a selection tool for regional support. So there's lots of things that we can discuss with private sector investors, but also with public sector people who are involved in early stage business support as well.
Amazing. Okay, good stuff. Right. Well, if you're watching this, we're going to share details underneath, but if you're watching it and you're looking to raise investment, get on Capital Pilot, get yourself registered as soon as possible. Okay, we'll leave it there for now. Thanks, Richard. Always enjoy talking to you about this. All right.
Fantastic, Paul. Great to talk to you too. Thank you.
Thanks a lot.